That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Got our tech editor Dan Howley is here to preview Nvidia's second quarter earnings. And we have our data and markets editor Jared Blickery to break down the moves today. Jared, let's start with you on that close.
Well, thanks, and let's start with the S&P 500, which just notched its first record closing high in about 9 sessions there. You can see it was up a quarter of 1% for the day. And let's check out the Dow as well, and we'll take a look at the intraday price action, starting out slightly in the red, but finishing off very close to those highs right there. And the NASDAQ up 0.2%, also a little bit of choppy action there, but I think investors will take that, especially as we look to close out the last week of summer. It's already here. S&P 600 small cap index up almost 0.8%, closing very close to its highs as well. And let's take a look at the sector action. Everything finished in the green, and it looks like a photo finish for healthcare there, which was lingering in the red, but all 11 sectors in the green, led by energy. That's XLE up over 1%. Then in second place, you have real estate, then tech, staples, materials, financials. And I got to call out financials here because that is a record high for that sector as well, up 11% year to date. And let's check inside the NASDAQ 100, where we see more green than red. Not a lot of dark green. We do see that in some of these software names. We'll take a look at that in a second. Some standouts to the downside. Nvidia, we're going to be talking a lot about that. Just down barely, 0.9%, but very close, within a few percentage points of its record high. Meta down 0.9%, Tesla down 0.6%. And let's just skip over to the semiconductor space. Now you take it on an equal weighted view. You can see most of these in the green today, led interestingly by Intel and Western Digital there. Each of those up more than 1%. And the software names, we saw some more outperformers here. Leading the team here is also team Atlassian, but they're in second place. MongoDB up 37%, Datadog up 4%. Just a few issues in the red there. And let me close on the Dow because we had a pretty nice day there. Even healthcare, which was the least bullish sector of the day, that was up. United Health up over 1%. Chevron, the leader there in energy, up over 1%. And then Salesforce up over 2.5%. And I'll send it back to you, Josh, on that.
All right, thank you, Jared. Dan, your thoughts on NVIDIA's upcoming report? What are you watching?
Yeah, Josh, obviously we're going to be looking at the results. For the quarter, we're anticipating EPS of $1.01 and revenue of $46.2 billion. That works out to a roughly 49% increase in EPS and 53% increase in revenue. That's important because if you look back Q2 last year, the increase was significantly more. And so this is just as we're seeing the company continue to increase its revenue, increase its EPS, the percentage growth starts to slow down, kind of the law of large numbers coming into play right there. And so really, that's going to be something to watch just for an investor reaction, because we've seen in prior quarters where investors don't see that, triple digit growth and they kind of get a little spooked on that. Doesn't necessarily mean anything bad for the company fundamentally. In and of itself, we're going to be watching, obviously, the data center side of things. China's been a big question. How much revenue will come from that in the future? When do they expect to launch that next generation chip for the China market? That's going to be something to watch. And then, of course, the hyperscalers. How much revenue from data center comes from them? Last quarter, it was about half of all revenue for data center. Has that declined? Has it increased? That's something we're going to be watching. And then for me, I've said it before and I'll say it again, I really want to know what the gaming side is doing.
Absolutely. Daniel, you mentioned China. I'm curious, how do you think Jensen just frames that opportunity on the call? You're an NVIDIA investor, you're wondering what is the long-term opportunity there, just given all the headlines, all the cross currents? I mean, can Jensen say right now with great certainty what he thinks the long-term opportunity there is?
Yeah, I mean, he's said it before at different conferences before the ban was lifted, and that's that, look, half the AI developers are going to be in China. It's one of the largest markets in the world for AI. Nvidia wants and has to be there, and he said that the U.S. needs to be a part of that or risk being locked out entirely. And then we would see this bifurcation in the market of U.S. China AI, and then there's not going to be that huge opportunity for growth for U.S. developers, U.S. companies, and U.S. Providers like Nvidia. So I think that's something that he's going to continue to hammer as we hear from him on the analyst call. It's certainly something that we want to see or hear from some of the analysts as far as questions go. What does China look like? I'd like to know when, again, that chip starts to ship, when that revenue starts to show up for Nvidia, and then what they see the total addressable market being there. There's been a number of about $50 billion TAM bandied about from different analysts and such. What do they see over the long term when it comes to the China market? And do they have to keep playing this game with the U.S. government of, can you please authorize this chip? Can you please authorize this next chip?
All right, thank you, Dan. We'll be watching. And stay tuned for our live coverage of NVIDIA's second quarter earnings report that starts at 4:15 p.m. Eastern. And you won't want to miss our interview with NVIDIA CEO Jensen Huang. Tune in at 6:30 p.m. Eastern. Well, investors looking for more color on the AI trade with NVIDIA earnings, while the S&P 500 hits a new record close. And here with more on the market action, we got LPL Financial Chief Technical Strategist Adam Turnquist. Adam, always great to see you. So let's actually start there, Adam. You look at the S&P 500, the SPX, Adam. Now you're a technician, so you're studying those charts. When you look at the SPX, what do you see? What's ahead, at least near to intermediate term?
Hey, Josh, great to be back on. And I've always been told throughout my career, don't argue with a market or a bull market that's making new highs, and that's exactly what we witnessed today. Of course, as technicians, we look at price action as one piece of evidence, but we also look at things like market breadth. Is it confirming this rally to new highs? And I think over the last couple of weeks, we've seen participation build out beyond big tech. That's been the big theme since April, with those mega caps doing most of the heavy lifting. But I think of it more as the field of dreams. If you build it, they will come, and we're starting to see other stocks participate. Last week, for example, 71% of S&P stocks closed above their 200-day moving average. That was a year-to-date high. We had the equal weight index rally to new highs as well. So on the surface, looks good. Underneath the surface, we're getting building participation. If we're being nitpicky and looking for some cracks, there has been a slowdown in some of the momentum indicators that we look at, forming shorter term divergences, but nothing that would indicate a market top or anything rolling over. More of a potential buying opportunity if we get some seasonal weakness coming up in September.
It's interesting because I've had other guests on the show. Now, granted, these are strategists, these aren't chartists, but they were suggesting, hey, they wouldn't be surprised to see a near-term pullback here. But you're saying, you look at the charts, you don't. That's not your base case. You don't see a drawdown coming.
I think when we view risk either to the upside or downside, the next 5% probably lower. We're a little bit extended, a little bit overbought here. I think a lot of good news, putting on our macro hat here, has been priced in, whether that's in terms of monetary policy, treasury yields, the geopolitical climate. So I do think there will be a buy the dip moment. In terms of downside, support levels that really stand out are those February highs around 61.44. Now that would be about a 5% drawdown from current levels. Nothing out of the ordinary in terms of a bull market or a second half. I do think that would be more of a buying opportunity than anything else for investors.
Adam, I also want to get your thoughts on the small caps, which I'm looking at the Russell 2000. It was up nearly 0.7% again today. Strong performance. Adam, I was talking to a strategist on the show this week, and he was making the case, listen, to him, it looks like the economy's hanging in there. He says, hey, Fed cuts, they're on the way. He likes the small caps. You look at the technicals for the small caps, what do you see?
So with small caps, I tend to agree, at least on a short-term basis here, there is a window for outperformance over large caps. They are reliant on this soft landing narrative. So the Fed cuts rates, we avoid a recession. Interest rates remain capped or low is key to that trade, because almost half of small cap debt is floating rate. So as rates, or if rates move higher, that tends to pour cold water on that trade. I get it, they're cheap on a relative basis to the S&P 500. They have some benefits, more asymmetric benefits out of the One Big Beautiful Bill Act. But I do think this is more of a catch-up rally. For example, the S&P 600, I think there's upside there to around 1550. That's about a 7-8% move from current levels. Participation there also building in. I think it does play into the theme of just a broader rally in general, now that small caps are participating here. However, don't hold your breath for small caps to lead the market for a meaningful period. They have been consistent underperformers because they're going up against names like Nvidia in the big tech trade and AI, and they've consistently underperformed.
Adam, I have to ask you finally, Nvidia, earnings on deck. What do the technicals tell you?
Right now, technicals look pretty solid for Nvidia, hovering just below record highs. There's resistance around 184.50, call it. Now, the stock did violate a shorter-term uptrend just recently as momentum, we'll call it, stalled a little bit. Looks just like a consolidation. If you start to see Nvidia drop below 169, that's the 50-day moving average, that would open the door for some more downside, maybe to the 150 area. Would not be surprised if that was the case, if Nvidia pulled back to 150. I would be surprised if it breaks 150. There's a confluence of support there. But overall, technical setup looks good. We had the stock finally breaking out to new highs, not only on an absolute basis this summer, but also on a relative basis, suggesting this is more of a longer-term leadership trend that's developing. In terms of the implied move, we're looking for about a 6% or so up or down move based on the options market by Friday, so we'll see how that plays out. But certainly a big test, not only for the stock, but the AI team in general.
For sure. Adam, thanks so much. Always great to have you.
All right, thanks, Josh.
Well, we're inching closer to those second quarter results from Nvidia now. Investors will soon get more color on the chip giant and the state of the AI trade. And here with the key themes to watch, we have the one and only Futurum CEO. That would be Daniel Newman. Dan, great to see you, especially on set. All right, so Nvidia earnings, Dan, they're here. The most hotly anticipated earnings report of the season. I think we can say that confidently. What are you expecting to hear?
I'm just pressing that refresh.
Yeah.
Want to see the numbers, want to see the print, want to see the print. I mean, the whole market is basically teetering. There's all those memes on the internet that show like a person holding.
No pressure for Jensen Huang, just the stock market on his shoulders. That's all.
The world's economy in many ways. But I think we all agree they're going to beat. I don't think there's really a single credible analyst out there that doesn't think they're going to hit the number this quarter. But the themes are a few. One is margins, right? Over the last few quarters, there was a little bit of margin erosion as they ramped Blackwell. Can they get margins back up over 73, 74%? Can they show that progress? I think the market will respond really positively to that. China, we've talked about that a lot, but and I heard you actually talk about that in a segment with Dan. And look, the complexity with the China situation is China wants Nvidia. Everything else, in my opinion, is political theater. I don't think that Huawei is actually creating the demand within China, within its own research and development.
What did you make, though, Dan, of those reports that the Chinese government telling the homegrown teams, hey, there's security issues? What do you think of that? That was drama to you?
Well, I do think there's a lot of play with the trade war, with the tariff wars, right? U.S. wants more rare earth magnet. China wants access. I don't think they want H20s. I mean, they're going to use H20s, and they're actually really going to buy all the H20 B30s that they can get their hands on. But the diversion thing's still a challenge. They want Blackwell. They want B200s and 300s. Yeah. They want the most advanced chips. They want to compete for this. I mean, right now they're basically, and for many years they've been, playing with one arm tied behind their back. They don't have access to ASML at scale, so they can't make the most advanced chips. They've had, they've been cut off from the rest of the world in terms of certain suppliers, and now they are being asked to use 3- and 4-year-old deprecated AI chips from Nvidia. But Nvidia still has the best platform. It has the best software, hardware, frameworks, and libraries.
Is that the big competitive advantage for Jensen, that he has the chips, the software, the network, and he's got the full platform?
Absolutely. I mean, Huawei's trying. It's got its cloud matrix, and basically on a specification basis, what they've built is better than H20. It is more competitive. It's got better memory, better throughput, and its networking with Cloud Matrix is better. It's also very power hungry. It uses exponentially more power than Nvidia does. And that's actually not the biggest problem for China. They're firing up a new coal-fired plant every week. They don't have the same sort of ambitions with sustainability and green efforts, and they're not necessarily pushing the small modular reactor agenda as much as they're saying, we just need the power. And they've done a better job in China of building out capacity to be able to do AI. But they don't have access to the most advanced chips. And it's very straightforward. They want Nvidia, but they are playing the game, the same game that President Trump plays. They're not just going to say, yes, give us all we can get. We love you guys. They're going to say, hey, we're going to build our own. And if you're not nice to us, you're going to lose access to our market.
Do you think, Dan, and listen, we're going to be waiting for this print to hit the wires. Is there a part of Nvidia's business, is maybe there a segment of the business that you think we don't pay enough attention to?
I like that you asked that. The last few quarters, it's been automotive. there was a period of time, and to the credit of the team at Qualcomm, where Qualcomm had kind of run up the score on automotive. They had that $45+ billion automotive pipeline. And Nvidia looked like they had fallen off a little bit. You weren't hearing about it on the automotive, but with robotaxi back, with the focus on autonomy, with Waymo pushing forward, Nvidia has a big opportunity there. And I'll just add one more quick thing, Josh, is this physical AI trend. You saw he released—
Like robots.
He released the next generation of the compute platform for robots. They've basically built the robotics stack that matches the data center stack. And so that's the software hardware frameworks for the less technical. And that's like an opportunity that we think is multiple times
Right now,
larger than data
I've
center.
heard analysts say robotics is like around, 1% of total revenue, but you think over, let's say, the next 5 years, that becomes a much more important investor focus?
$4.5 trillion almost in market cap right now. How do you get to 8, 10? We have a path. We did our 2029 metrics. We think that Nvidia will keep about 90% of the GPU market. We see the AI chip market at $583 billion, 20+% CAGR towards the end of heading into the end of this decade. And Nvidia is going to keep most of that market share. But where do they get that growth and scale? Why not introduce the next $1 trillion opportunity, which is robotics? And as of right now, there is no company that is doing the whole thing for robotics the way there was a company doing the whole thing for data centers. So they're basically taking the playbook and they're moving it over to the next multi-trillion-dollar trend, which if you're an investor, you're saying, that's how we get the next double and the next double. Because all those 10,000% returns that people have had, you want them to keep their money in Nvidia. You don't want them to move over to Palantir or looking for the next thing. Nvidia is going to want to keep them in and give them the promise of those continued gains and returns.
All right, that report hitting any minute now, Dan. You're going to be sticking with us to help make sense of it all coming up. The numbers you've been waiting for, Nvidia's second quarter earnings, the results up next, plus expert analysis over the next hour, including during the earnings call. And of course, you don't want to miss our interview with Nvidia CEO Jensen Huang. Tune in at 6:30 p.m. Eastern. We are still waiting for Nvidia's results to cross, and we'll bring them to you as soon as we get it. I would say, Dan, as we wait here, it is worth noting, expectations kind of hot into the print. I mean, you're looking at a stock that has surged about 30% since the last time they reported results. How do you think about that risk?
I mean, at Liberation Day, it's almost doubled. If you actually look back to that period of time when the market was capitulating and everybody thought it was the end of the AI trade. But everything's buoyed in the fact that the numbers are supported. You're talking about one of the more reasonable stocks in the Mag 7 based on its continued growth, based on its estimates. I actually feel incredibly optimistic because it's not overcooked. If this had like a Tesla kind of valuation,
then who knows? You know what? Let's get to those numbers. Right now, Dan Newman, I'll bring them to you. We have Nvidia. Let's start with the bottom line here. Adjusted EPS 105. I do not have a clean compare yet on the bottom line, but the top line, Q2 revenue, $46.7 billion. The estimate was $46.23 billion. So that's a beat on your top line. Adjusted gross margins, Dan, 72.7%. Go through the segments. I look at Q2 data center revenue, $41.1 billion. The estimate was $41.29 billion. Let's get to the gaming revenue as well, $4.3 billion. That beats. The estimate was $3.82 billion on the street. Now let's look for the forecast. What do they see ahead? They see Q3 revenue, $54 billion, plus or minus 2%. I don't see a compare there yet, but your initial take, Dan, on these numbers.
well, if I heard you right, did they miss the data center number?
Let me go back. I did not see. Let me get that for you.
I think you said it was 51.1 and the number was like 50.
Data center 41.1 billion. You're right.
Sorry.
The estimate was 41.29 billion.
So that's an interesting one. That's going to be very interesting to hear what happened because that's been such a buoy for the company's overall.
Let me also get you the compare on the forecast. Q3 revenue. I said 52.9 to 55.1 billion. Consensus was at 53.46 billion. Importantly, Nvidia has not assumed any H20 shipments to China. What do you make of that?
Well, I think that's good. That's upside. I mean, 54, so they came in above that 53 number. So they're not quite at the highest end, but they also came right in the middle, plus minus 2%. and they leave the China opportunity in there. There will be some licenses that could happen in this quarter, and that could provide some upside. But I think they're better off being cautious here. They're able to hit the number, overall beat the number without China in play. That leaves a little bit for the investor's imagination, Josh, that, hey, if China comes back into play, and by the way, this is like a situation that can change on the daily right now. If China comes back into play, there's upside in this next quarter.
I think that we do see, Dan, immediately some pressure on the stock. Now, this is the initial reaction, down about 3%. I think you'd have to chalk it up, at least initially here, to that Q2 data center sales miss.
Yeah, that's the one that stood out to me. My hair stood up on the back of my neck. And,
what do you think we're talking about there in terms of possible explanations for that?
Well, it could be a lot of things. The expectations are very high. Overall, the speed and the ramp of Blackwell, it could be just about shipments. I mean, you're so close on that number, when things ship, when things book, when things hit the numbers.
Does it make you, does it cause you any concern about just the general AI trend in spend?
They missed by like 100 million on a $41 billion number. I think overall, everything's still very, very much intact. We saw that over the last several months. We listened to the hyperscalers. We've listened to the OEMs that have reported during this period of time. That Nvidia number's been very strong. But I do think, and what our 2029 numbers suggest is, the CAGR in this business is going to fall into the 20s. Dan Hawley said something about law of large numbers. I mean, we are hitting a point now where, what do we expect? I mean, at some point, the growth is going to come into that 20-something percent, 2021 by the end of this decade. But they're growing really, really well. The demand is there. The hyperscalers are backing it up with continued CapEx spend. I think it's meaningful, and clearly the street agrees with me, that they weren't able to blow it out after so many quarters of seemingly always hitting that data center number. But you're talking 120 million on a $41 billion number.
Yeah, we should mention the capital return news as well. They do approve additional $60 billion to share buyback. You are seeing some kind of ripple effects here. AMD, they're a bit lower. TMC comes under some pressure. You think about the great AI trade and trend, though, Dan. I wonder if some investors thought, given what we heard from big tech and how during that earnings season, whether it was Microsoft or Meta or Amazon, Alphabet, they are clearly going to spend building out that AI infrastructure. And the assumption was it was all just going to be gravy for Nvidia.
Well, I think everybody did come into the number with really hot expectations. If you kind of look down the list so far, right? Margins were a little lower than
Q2 gross margins 72.7. The street was at 72.1.
Right, but there was a little lower than its peak, was what I was getting at. And I think people had seen those 74%-ish margins and wanted to see, are they climbing back? So they did better, but they haven't returned all the way to those margins yet. There might be a little pressure on that. I think they probably won't get much credit, Josh, for anything outside of data center. I think data center is the focus. Yep. And so that was the number that was missed. But I still said most was going to ride on the guide. And the guide is good, but I think people wanted it to be top of the
I just wonder if people see this print and this headline, Dan, and it renews some worries about some type of broader AI slowdown, which has been, of course, a huge reason we've seen the broader market rally the way it has.
Well, I followed the cloud trend a little bit, and you followed this over the years. Amazon, right? Their numbers started to pull back to 15% growth, but they were growing tens of billions of dollars on an annual basis for AWS. That was an example. I think we're seeing some of that here, is it was growing so fast, it is growing so fast, but at some point, that number has to turn into consumption, and I think you and I have actually had this conversation on the show. You saw that MIT study come out, 95% of AI projects aren't delivering fast ROI.
Yep. Got a lot of headlines.
I think while people want that to be a bubble, what I do think is we are overestimating the human's ability to ingest this stuff. Okay, so the technology is going up very quickly. The infrastructure spend is massive. You see these numbers, they're massive numbers. Having said that, the ability for enterprises, for instance, or sovereign clouds to be stood up and be put to use, that takes a lot of time. And we as a society, we as people, have a natural resistance to change that's this frenetic. We do not do that well. So we're not seeing the stuff hit the enterprise. We've heard this kind of software as a service narrative is going to die or is dying. And I've been one of the purveyors that AI is eating software. But this doesn't happen overnight. For Nvidia, this growth almost felt like it happened overnight. At some point, we do need to digest all this, and we do need to start to see more companies, that broadening out of AI being utilized, start to come to fruition.
Yep. All right. Stock down about 2.5% right now. Clearly, that data center, and I think that forecast clearly in focus. We're continuing our coverage of Nvidia's second quarter earnings. The stock under some pressure here, but off the early lows. After the break, we're going to have more analysis on the results as we gear up for that earnings call. And of course, you don't want to miss our interview with Nvidia CEO Jensen Huang at 6:30 p.m. Eastern. Welcome back to our coverage of Nvidia earnings second quarter results. Nvidia once again blew past Wall Street's expectations. Revenue and profit both topping estimates. The company reporting revenue at $46.74 billion. Data center revenue coming in at $41.1 billion, but that number did miss what the street was looking for. Right now, let's take a look at the chip maker stock trading a bit lower here in the after hours. For more, let's bring in Angelo Zeno. He is Senior Equity Analyst at CFRA Research. Angelo, it is always great to see you. The numbers are out. I see the stock is down now about 1%, so off the lows there, Angelo, but give me your take on the print.
Yeah, so Josh, thanks for having me. And I just heard your last interview, but overall it was, the numbers did beat. It was stronger than expected on the gaming side, which the street really doesn't give much credit to. On the data center, revenue, it was a slight miss. Now, when you kind of think, look below the numbers there on data centers, it looks like on the compute side, you actually saw a sequential decline, whereas networking strength was pretty strong. So my guess is, clearly there was no revenue tied to the H20 that did hit the data center revenue or kind of, prevented, higher revenue from the compute side. But also, it'll be interesting to see what Jensen has to say about the trajectory of Blackwell, in the quarter and as far as the October quarter goes. But when you look at that October quarter guide, which is more important, slightly above expectations, about $1.5 billion above what we expected. And, you kind of look at, where else you're looking at there is on the gross margin side, 72.7 was the number for the July quarter. It was slightly above where we expected, and the guide was relatively in line with expectations. So overall, I think was relatively in line with expectations, with some moving parts on between the July and October quarters.
Yeah, we should note, Angelo, I mean, to your point, expectations, listen, the stock heading into the print, it was up more than 30% since the last time they had reported, so expectations were definitely high. I guess one question though, Angelo, and it's kind of a broader question, do you see anything in the print, whether it's that data center sales miss we talked about, whether it's the forecast for fiscal Q3, it looks like it's in line with consensus, but maybe lower than some had estimated. Anything there, Angelo, that causes you any kind of more general concern about that broader AI trade and trend?
No, not at all. I mean, if anything, when you look at the October quarter guide, Nvidia specifically excluded any type of revenue from to China. So if anything, you're looking at zero revenue for the July quarter out in China. In fact, you're talking about a $4 billion revenue hit in that July quarter from China, the lack of China revenue. And now in the October quarter, the fact that they didn't add any China revenue at all tells me that, hey, listen, the business prospects, the demand environment looks extremely strong in the Western markets. And to the point of the last guest, there is upside potential once you start potentially adding in China. I think the call will be extremely important because you do have everyone's going to be listening into what Jensen has to say about that China opportunity, when we could potentially see revenue ramp. Is there some sort of suspension on the H20? Are they going to prevent the H20, forego it in waiting for a B30 ramp, a Blackwell ramp into China? All questions that I think investors are going to be waiting to hear on the call.
Do you think, Angelo, I mean, if I'm an investor in this name, I am wondering what is the long-term opportunity for Nvidia in China? And just given all the headlines and cross currents and political posturing, do you think we can say with any certainty and real clarity right now what that opportunity is? Like how much money Jensen Huang can really make over there?
Yeah, I mean, listen, you kind of try to think about this. I mean, Jensen alluded to it being a $50 billion market opportunity in, over the next year or so. And, our view is, they could potentially take 30 to 35 billion in revenue. And again, it remains to be seen exactly whether or not that could happen. I don't think that can happen without a Blackwell offering in that market. I think Jensen's really trying to push that with the administration. I think he's going to get that, his wish, at some point in time, hopefully sooner than later. Maybe it gets thrown in with a larger China deal with the US. But once we do get that approval and Nvidia can start selling a Blackwell chip into China, again, I do think you're going to hear on the call, Jensen really talk about the fact that, hey, listen, there is a massive opportunity in China, and the fact that, hey, Nvidia really needs the China market to be successful here. And then, when you kind of think about just the run rate here in revenue, in order to kind of meet some of the maybe higher expectations that have been thrown into the revenue numbers into 2026 and 2027, it would be nice to see some, China revenue really start ramping up here, because you need to start seeing some diversification really away from these cloud service providers here in the US.
Final question, Angelo. How long do you think this sort of great AI database build out goes on for, which of course has been just this enormous historic tailwind for Jensen Huang's company? I mean, is it 1 year, Angelo, 2 years, longer?
I mean, I think the hope is we can chase this for, the next 5 to 10 years, but maybe to your point, I mean, nobody knows. Our view, at the very least, is this goes at least into 2027, 2028, just based on the pipeline we've seen from NVIDIA, especially as we get to Rubin Ultra into 27 and 2028, and the greater content that you're going to see in these data centers. And that's a huge part of the story, is the content growth opportunity for NVIDIA over the next couple of years. I'd also say, when you look at the spending environment and where we think it can go, sub $500 billion market last year in terms of total CapEx spend, we think we'll get to north of $1 trillion by 2028. And when you start thinking about kind of just the overall IT spending environment and what percentage of IT spend can come from, the overall server space, we think it gravitates closer and potentially exceeds 10% of total IT spend, whereas it was about mid-single digit last year. So we do think there's still some notable upside here, at the very least over the next 2 to 3 years. And then it's just kind of, let's see how things progress here from a demand environment.
Angelo, great to see you. Always appreciate that instant analysis, Angelo. Thank you, sir.
All right, thanks for having me, Jim.
Let's get to Yahoo Finance's Dan Halley now with the key takeaways from NVIDIA's second quarter results. What do you make of them, Dan?
Yeah, Josh, obviously the data center is kind of standout here, coming in with that 41.4 billion number, just short of expectations of little more than 41.2 billion. As Dan Newman, the prior guest, said, gaming kind of standing out as a big kind of beat there with that 4.3 billion. I want to note something though. In Colette Kress's CFO notes, she points out that data center compute, that's the chips themselves as part of the data center business revenue, declined 1% sequentially. Now she says that was a result of a $4 billion reduction in H20 sales. So, you're kind of taking that out of that data center. We don't know how the estimates that had come forward, how many of those took into account China data center sales, or how many discounted them not being there for the quarter. But that, I think, is something to just keep in mind as we look at that data center. Obviously, the stock off slightly, more than 3%. And, I think the bigger part here is the EPS beat of the $1.05. I also want to point out that the forecast does not include any of that H20 China sales moving forward. That's something that was very much in question. Would they start to include H20 again now that they're able to sell it into China?
That forecast is critical there, Dan. It looks like the company's saying sales about 54 billion in that fiscal Q3, and that looks like in line with consensus, but maybe lower than some had projected there.
Yeah, that's been one of the big things for NVIDIA, obviously, is the beat and raise. People looking to see how much further this can kind of stretch out. And so you were just talking about the big AI explosion with these huge hyperscalers. I think it's also important to note that Colette Kress pointed out that now the sale of those the revenue from those data center sales now 50% of approximately 50% of that is made up of sales to those big name companies, those cloud service providers. We had seen prior to that a little less than 50% in the prior quarter came from that source. So, just a kind of potential uptick there in revenue coming from those companies. I think that's something to keep in mind moving forward. And then again, as you were pointing out, that forecast, not exactly what people maybe were hoping to see when it comes to Nvidia after being so used to this kind of beat and raise.
Yeah, for sure. Stock down about 3% right now. Dan, thank you so much. After this break, we have more analysis on NVIDIA's second quarter earnings report as we gear up for the earnings call. And you won't want to miss our interview with NVIDIA CEO Jensen Huang. Tune in at 6:30 p.m. Eastern. NVIDIA reporting second quarter results. The chip maker reporting no sales of H20 chips to China-based customers in the second quarter, saying it benefited from millions of dollars in sales to H20 chips to a customer outside of China. And joining me now to talk about all this, we got Paul Triolo, DGA Albright Stonebridge Group partner for China and technology policy lead. Paul, it's great to see you. I know, Paul, you're not a financial analyst, you're a policy guy, but I would love your take, Paul, on this earnings print. Stock is down about 3% here in the after hours. What stood out to you, Paul, about that report?
Yeah, great question. Look, I think there's this uncertainty about China is sort of gnawing at investors in terms of outlook here, because I think as we know, Nvidia didn't include any sales, of course, of H20s. I think that was expected given the quarter. But looking ahead, I think it's a little surprising that there's no revenue projected for H20s or this notional B30 based on the Blackwell architecture that's being designed explicitly for China. So it really highlights that Nvidia is really caught in the middle of this U.S.-China technology competition, if you will. And it's pretty amazing that U.S. policy can impact such a huge impact on Nvidia's earnings here. We're talking about, I think the estimate was $4.8 billion or $5 billion worth of lost revenue from the H20. And then, there's Nvidia sitting on something like 700,000 H20s in the stockpile, hoping to sell those to China. And then they also paused potentially building more H20s at TSMC in Taiwan because of the uncertainty they're facing in China. Because the Chinese government, of course, is looking at the H20 and is also not happy about things like the US government talking about tracking GPUs. And so they've issued guidance to some of their companies to reconsider using the H20 and looking at domestic alternatives here. So Nvidia is really in a tough position here where the Chinese companies, I was in China last month, I talked to all the Chinese AI companies, they all want to buy the H20, for example, for inference, because it turns out to be really good for inference. But now they're up against the Chinese government desire for them to look at alternatives from companies like Huawei and others in China. So Nvidia has a much more complicated equation here as they look to the China market and look to figure out how they maintain a foothold there in this key space of AI, particularly AI inference, where the H20s and presumably these B30s would be highly useful to Chinese companies. So I'm just stunned in some degree by the huge impact that the U.S. restrictions have had on Nvidia's bottom line here.
Do you think, Paul, if I'm in this name, if I'm an investor, bottom line, I want to know what is my long-term opportunity over in China? How much money can CEO Jensen Huang ultimately make over there? Do you think we can really know that right now with any great degree of clarity and confidence, given all the headlines and dynamics and cross currents you're highlighting, Paul?
No, I think we really can't, because there's a couple of big things. One I didn't really mention either. So in addition to sort of where the Chinese government is going to come down on this, is it going to mandate, for example, that companies not use Western GPUs like from Nvidia and AMD? It's tricky because Chinese companies, as I said, want to use them. So there'll be some back and forth on this within China in terms of the H20s. Now, it's complicated also because the H20 is now viewed as somewhat outdated, and companies in China may be wanting to wait, for example, for the B30s that are based on the new Blackwell architecture. So there's sort of that technology component to this also. But over the long term, the hard thing to determine is when Chinese companies, in particular here Huawei, are going to be able to crank out to produce at scale and volume, some reasonable alternative to NVIDIA's GPUs here, and that's hard to pin down. Right now, for example, SMIC, which is the domestic foundry, can produce a fairly small number, say let's say 200,000 GPUs for Huawei, the Ascend series of GPUs. But Chinese developers don't really like this chip yet because there's still not a software environment around this. Of course, we know Nvidia has the CUDA architecture, and developers are used to using Nvidia hardware and software. And so, but the government is working really hard to push domestic companies into the domestic alternative ecosystem, and that's Huawei. That's also a number of smaller GPU developers like Meta X and BREN, which have pretty good offerings, but they're also reliant on SMIC to manufacture their designs. So over the next year, I think we're going to see the emergence in China of better capabilities in advanced manufacturing. But it's hard to say how good this will be and how willing those developers in China will be to move away from the NVIDIA ecosystem, which they've known for the last 10 years, 10 or so years. And it's hard to know when the Huawei alternative in particular will be good enough that developers will say, okay, we can switch over to this. Huawei is working overtime to make this easy. It's working with companies like DeepSeek and Alibaba to try to improve its offerings, but it's hard to say exactly when this happens. But in general, then I would think over time, NVIDIA in this game, if the US is going to continue to impose these controls on their GPUs, is probably looking at a pretty diminished market share in China if we look a little bit farther out, 2 to 3 years.
Paul, I only have 30 seconds, but I want to get this one in there. There are some, Paul, who do argue the US government shouldn't be permitting Nvidia or AMD to sell AI chips to China because they say it's a national security risk. Quickly, Paul, 30 seconds. What's your response?
Well, look, I think that's a complicated question because I think that hinges on what you think AI will be used for in the future. The U.S. position is that it's going to be decisive in some military applications. I don't really accept that. I think the AI and China viewed AI as a very much a civilian technology, and the most of the benefits are going to be in the civilian sector. Like any technology, of course, AI will be able to be used for military purposes. But really, it's not really even a dual-use technology. It's really a civilian use technology, and it's going to be so important that I think that focusing only on the potential national security risks of AI, I think, is going to be really detrimental, in particular to U.S.-China relations and to things like progress on AI safety. And then, of course, Taiwan is another potential political risk because, again, all these GPUs that we're talking about from NVIDIA that we talked about today, nobody mentioned Taiwan, right? They're all manufactured in Taiwan, virtually all of them, right? Or packaged in Taiwan. And Taiwan, of course, is a major geopolitical flashpoint here. So there's a lot of risks around treating AI as a race or a competition with China. And so I'm a little bit concerned that the risks could end up outweighing any gains that are perceived by controlling this technology, which is really a general use technology.
Paul, great to see you. Great to have you on the show. Thank you.
Thank you.
From Nvidia to the broader chip sector, semiconductors are powering markets, but what are the best opportunities now? Well, Ali Mogharabi, senior equity analyst at West End Capital Management, is here to break down the top plays. Ali, let's get right to these picks, Ali, because I know that great AI trade and trend. You like Nvidia, but you say it's not the only name in town. You also like other names. Walk me through some of them, Ali. Would some of those names be Nvidia competitors? Do I want, for example, to own Lisa Su's company? Should AMD be in my portfolio?
Sure. Well, let me disclose this. We are now out of NVIDIA. We've been out of NVIDIA for some time. Right now, we think that the main competitor in the United States domestically is actually AMD. So to answer your question, yes. And the way we're looking at it is basically, and you saw it in today's results, there is huge client concentration for NVIDIA. And actually, those clients, the hyperscalers, they really want to approach it with this multi-vendor strategy. So they want to make sure that they go with just another, high quality, high computational capability GPU provider. And we think that that's AMD, especially as they transition onto the inference side of AI. So, it's basically somewhat of a catch-up trade, but we think AMD is positioned to at least, grab some market share from NVIDIA. Obviously, over the long run, NVIDIA will remain the market leader, but we think right now AMD represents the best trading opportunity.
All right, so Nvidia got AMD, Ali. What about Broadcom? Does that also have to be part of my AI portfolio? Do I need Hock Tan's company in there?
Yeah, Broadcom also, and actually it's also related to some of the hyperscalers. So Broadcom is very active, as you know, in creating customized AI chips. So, you know, a lot of these hyperscalers are going to that direction. So as you know, Alphabet or Google has been utilizing Broadcom for a long time to create its TPUs. They're also including bringing in another partner, MediaTek, to do that. But Broadcom remains very, very active with Google. Obviously, they're also out there with Meta, with Apple. So when you're talking about customized AI chips, we think Broadcom is probably the main beneficiary on that front.
What about the names, Ali, that make the chip making equipment gear? How about those?
Yeah, ASML is one. They have a monopoly. Obviously, it's a Dutch company. There are a lot of geopolitical factors, especially with tariff talks these days. But ASML have a monopoly in terms of providing that equipment that helps you etch the circuits out there on those little wafers. So that's very, very important. And as the demand for AI chips continues to grow, whether it's customized, whether it's GPUs, we think these guys are actually considered very, very important part of this overall growth in the AI space.
All right, there's your AI portfolio. Ali, thank you, sir.
Sure.
Nvidia's second quarter earnings call is almost underway now. Nvidia reporting a miss on data center revenue in the second quarter amid no H20 sales to its China-based customers. For a look at the AI trade, we've got Dave Mazza, Roundhill Investments Chief Executive Officer, joining us now, and Futurum CEO Daniel Newman still with us. Dave, it is good to see you. I'll start with you, Dave, because I want your take on this earnings print. Seems like some, at least initial, perhaps disappointment, Dave. The stock under some pressure in the after hours, but what did you make of the report?
Well, yeah, we saw the classic beat on the top and bottom line. We saw revenue guidance, though, that was below, I think, what the whisper number, what the market was really looking for. We've become so accustomed to Nvidia blowing away earnings numbers. The big question mark, and I think what we're going to need to hear on the call, is what's going on with China? What are the expectations for when we're actually going to see sales there re-emerging? We know they didn't put it in the guidance, which actually could lead for some upside in the stock going into the call.
Dan, I want to bring you in here. Dave brings up the point. First and foremost, what is going on with China? What do we think is going on there?
They left us uncertain. You know, I was really, if you were a bull, you were really hoping that Jensen came out and said, this is the situation. We think there's going to be some shipments. They're playing it really safe. The good news, if you're an investor, though, they've given a bit of a what I call a $0 call option on the next quarter, because if those licenses come through and H20s are able to ship, there's basically no accounting for any shipments into China. So that's the upside. But you're leaving that market vacated, which goes back to the situation we had a couple of quarters ago where we're saying, is there enough demand outside of China to keep the growth story going? And that uncertainty is going to keep investors a little bit on their toes, and I think that's what's driving downward pressure here.
You know, Dave, I was talking to a policy analyst who thinks a lot about China, and I asked him this question: listen, can we know with can we have any clarity, confidence that we know if we're Nvidia investors what the long-term opportunity right now is in China for Jensen Huang? How much money can he really make over there? He said too many cross currents, too many moving parts right now to say with real certainty. Do you agree with that, Dave?
Yeah, I'd have to agree. I mean, we know that China represents roughly 13% of revenue, but we also know that the hyperscalers are 40% of revenue. Significant concentration from the customer side. But China was that growth area for a long time. There was expectations in this AI arms race for that to be another source of demand. When that essentially goes to zero, that raises a lot of question marks. I do believe, though, that there is still, to use that term, cross currents that remain out there, which is difficult to ascertain exactly what we're going to see and see when, which is why so much is riding on what the comments are going to be. I do think ultimately, though, that's something that's going to be kickstarted again, because much of this is just job owning with China and the Trump administration. But until then, until we have some clarity, I do think investors are going to be cautious.
All right, let's go now to NVIDIA's earnings call and listen in on what they have to say on the recent quarter.
Data center revenue grew 56% year over year. Data center revenue also grew sequentially despite the $4 billion decline in H20 revenue. Nvidia's Blackwell platform reached record levels, growing sequentially by 17%. We began production shipments of GB300 in Q2. Our full stack AI solutions for cloud service providers, neoclouds, enterprises, and sovereigns are all contributing to our growth. We are at the beginning of an industrial revolution that will transform every industry. We see $3 to $4 trillion in AI infrastructure spend by the end of the decade. The scale and scope of these buildouts present significant long-term growth opportunities for NVIDIA. The GB200 NVL system is seeing widespread adoption with deployments at CSPs and consumer internet companies. Lighthouse model builders, including OpenAI, Meta, and Mistral, are using the GB200 NVL72 at data center scale for both training next-generation models and serving inference models in production. The new Blackwell Ultra platform has also had a strong quarter, generating tens of billions in revenue. The transition to the GB300 has been seamless for major cloud service providers due to its shared architecture, software, and physical footprint with the GB200, enabling them to build and deploy GB300 racks with ease. The transition to the new GB300 rack-based architecture has been seamless. Factory builds in late July and early August were successfully converted to support the GB300 ramp, and today, full production is underway. The current run rate is back at full speed, producing approximately 1,000 racks per week. This output is expected to accelerate even further throughout the third quarter as additional capacity comes online. We expect widespread market availability in the second half of the year as CoreWeave prepares to bring their GB300 instance to market, as they are already seeing 10x more inference performance on reasoning models compared to H100. Compared to the previous Hopper generation, GB300 NVL72 AI factories promise a 10x improvement in token per watt energy efficiency, which translates to revenues as data centers are power limited. The chips of the Rubin platform are in fab. The Vera CPU, Rubin GPU, CX9 SuperNIC, NVLink 144 scale-up switch, Spectrum X scale-out and scale-across switch, and the silicon photonics processor. Rubin remains on schedule for volume production next year. Rubin will be our third generation NVLink rack scale AI supercomputer with a mature and full-scale supply chain. This keeps us on track with our pace of an annual product cadence and continuous innovation across compute, networking, systems, and software. In late July, the US government began reviewing licenses for sales of H20 to China customers. While a select number of our China-based customers have received licenses over the past few weeks, we have not shipped any H20 based on those licenses. USG officials have expressed an expectation that the USG will receive 15% of the revenue generated from licensed H20 sales. But to date, the USG has not published a regulation codifying such requirement. We have not included H20 in our Q3 outlook as we continue to work through geopolitical issues. If geopolitical issues reside, we should ship $2 to $5 billion in H20 revenue in Q3. And if we had more orders, we can build more. We continue to advocate for the US government to approve Blackwell for China. Our products are designed and sold for beneficial commercial use, and every licensed sale we make will benefit the US economy, the US leadership. In highly competitive markets, we want to win the support of every developer. America's AI technology stack can be the world standard if we race and compete globally. Notably in the quarter was an increase in Hopper 100 and H200 shipments. We also sold approximately 650 million of H20 in Q2 to an unrestricted customer outside of China. The sequential increase in Hopper demand indicates the breadth of data center workloads that run on accelerated computing and the power of CUDA libraries and full stack optimizations, which continuously enhance the performance and economic value of our platform. As we continue to deliver both Hopper and Blackwell GPUs, we are focusing on meeting the soaring global demand. This growth is fueled by capital expenditures from the cloud to enterprises, which are on track to invest $600 billion in data center infrastructure and compute this calendar year alone, nearly doubling in 2 years. We expect annual AI infrastructure investments to continue growing, driven by the several factors: reasoning agentic AI requiring orders of magnitude more training and inference compute, global buildouts for sovereign AI, enterprise AI adoption, and the arrival of physical AI and robotics. Blackwell has set the benchmark as it is the new standard for AI inference performance. The market for AI inference is expanding rapidly, with reasoning and agentic AI gaining traction across industries. Blackwell's rack-scale NVLink and CUDA full-stack architecture addresses this by redefining the economics of inference. New NV FP4 4-bit precision and NVLink 72 on the GB300 platform delivers a 50x increase in energy efficiency per token compared to Hopper, enabling companies to monetize their compute at unprecedented scale. For instance, a $3 million investment in GB200 infrastructure can generate $30 million in token revenue, a 10x return. NVIDIA's software innovation, combined with the strength of our developer ecosystem, has already improved Blackwell's performance by more than 2x since its launch. Advances in CUDA, TensorRT LLM, and Dynamo are unlocking maximum efficiency. CUDA library contributions from the open source community, along with NVIDIA's open libraries and frameworks, are now integrated into millions of workflows. This powerful flywheel of collaborative innovation between NVIDIA and global community contribution strengthens NVIDIA's performance leadership. NVIDIA is a top contributor to OpenAI models, data, and software. Blackwell has introduced a groundbreaking numerical approach to large language model pre-training. Using NV FP4, computations on the GB300 can now achieve 7x faster training than the H100, which uses FP8. This innovation delivers the accuracy of 16-bit precision with the speed and efficiency of 4-bit, setting a new standard for AI factor efficiency and scalability. The AI industry is quickly adopting this revolutionary technology, with major players such as AWS, Google Cloud, Microsoft Azure, and OpenAI, as well as Cohere, Mistral, Kimi AI, Perplexity, Reflection, and Runway, already embracing it. NVIDIA's performance leadership was further validated in the latest MLPerf training benchmarks, where the GB200 delivered a clean sweep. Be on the lookout for the upcoming MLPerf inference results in September, which will include benchmarks based on the Blackwell Ultra. NVIDIA RTX Pro servers are in full production for the world system makers. These are air-cooled PCIe-based systems integrated seamlessly into standard IT environments and run traditional enterprise IT applications, as well as the most advanced agentic and physical AI applications. Nearly 90 companies, including many global leaders, are already adopting RTX Pro servers. Hitachi uses them for real-time simulation and digital twins. Lilly for drug discovery, Hyundai for factory design and AV validation, and Disney for immersive storytelling. As enterprises modernize data centers, RTX Pro servers are poised to become a multi-billion-dollar product line. Sovereign AI is one on the rise as the nation's ability to develop its own AI using domestic infrastructure, data, and talent presents a significant opportunity for NVIDIA. NVIDIA is at the forefront of landmark initiatives across the UK and Europe. The European Union plans to invest 20 billion euros to establish 20 AI factories across France, Germany, Italy, and Spain, including 5 gigafactories to increase its AI compute infrastructure by tenfold. In the UK, the Umbard AI supercomputer powered by NVIDIA was unveiled at the country's most powerful AI system, delivering 21 exaflops of AI performance to accelerate breakthroughs in fields of drug discovery and climate modeling. We are on track to achieve over 20 billion in sovereign AI revenue this year, more than double than that of last year. Networking delivered record revenue of 7.3 billion, and escalating demands of AI compute clusters necessitate high efficiency and low latency networking. This represents a 46% sequential and 98% year-on-year increase, with strong demand across Spectrum-X Ethernet, InfiniBand, and NVLink. Our Spectrum-X enhanced Ethernet solutions provide the highest throughput and lowest latency network for Ethernet AI workloads. Spectrum-X Ethernet delivered double-digit sequential and year-over-year growth, with annualized revenue exceeding 10 billion. At Hot Chips, we introduced Spectrum XGS Ethernet, a technology designed to unify disparate data centers into gigascale AI superfactories. CoreWeave is an initial adopter of the solution, which is projected to double GPU to GPU communication speed. InfiniBand revenue nearly doubled sequentially, fueled by the adoption of XDR technology, which provides double the bandwidth improvement over its predecessor, especially valuable for the model builders. The world's fastest switch, NVLink, with 14x the bandwidth of PCIe Gen 5, delivered strong growth as customers deployed Grace Blackwell NVLink rack-scale systems. The positive reception to NVLink Fusion, which allows semi-custom AI infrastructure, has been widespread. Japan's upcoming Fugaku Next will integrate Fujitsu's CPUs with our architecture via NVLink Fusion. It will run a range of workloads, including AI, supercomputing, and quantum computing. Fugaku Next joins a rapidly expanding list of leading quantum supercomputing and research centers running on NVIDIA's CUDA-Q quantum platform, including ULIC, AIST, NNF, and NERSC, supported by over 300 ecosystem partners, including AWS, Google Quantum AI, Quantinium, QEra, and PsiQuantum.
We just heard from NVIDIA's CFO there on the earnings call. Dan, Dave, want to get your thoughts here on where we heard so far. So CFO Colette Kress, Dave, she made some comments. Let's get right to China, because that's front and center for investors. And Colette Kress talking about how they did emphasize that Q3 outlook, Dave, doesn't reflect any H20 shipments to China. She said NVIDIA could ship, she says, 2 billion to 5 billion of those H20 chips to China if, and this is a big if geopolitical issues permitted. What did you make of that, Dave?
Well, on one hand, I think it's positive that they're coming right out and addressing the kind of elephant in the room. This is the big question mark about this particular earnings report and then what the outlook is going forward. So if that, to your point, big if is addressed, then that's a huge benefit. But we also know, and we heard earlier from the release, that we still don't necessarily have that 15% revenue agreement actually solidified. And then what else is actually going to happen with the approval on the Blackwell, which is, of course, a significant improvement from a computing power perspective on a relative basis. So until we actually, I think the analysts get a chance to kind of unpack this, I think investors are going to be continued left with more question marks than answers.
Dan, here's another interesting kind of open question mark. We were very focused on this U.S. 15% China revenue share. Investors wondering, okay, well, what does that mean for margins looking ahead? It sounds like, at least pertaining to this quarter, we don't know what's ahead, but on this quarter, Nvidia is saying on that the U.S. government hasn't published regulations yet codifying this 15%. So that still sounds like, at least right now, sort of not a done deal.
Yeah, it's still up in the air. Josh, I never believed that Nvidia would pay for that, just to be clear. That would have been passed through. The demand in China for H20 is still palpable. So I wasn't concerned about margin pressure that it created. In fact, I even thought they could probably make a margin on that passing through and increasing costs. But what it does show is that this kind of policy, this ping pong we're playing with policy, is creating just more and more issues that Colette Kress and Jensen Huang have to deal with on a quarter-to-quarter basis. And that, of course, leaves shareholders a bit more uncertain than they want to be. And that is why we're seeing this bit of pressure in the after hours. But I thought actually the China guide and the 2 to 5 range that was provided was optimistic. It shows that upside. Because remember what I said earlier, there's 0 in the forecast. So if this happens, it's all upside. And yet the guide, while it wasn't the whisper number, was still just above the midpoint of the range that was provided.
Dave, here's another interesting data point Colette Kress gave us here. She discussed CapEx pledges by the cloud giants. Puts that number, Dave, it looks like at $600 billion for this calendar year. I mean, these numbers are incredible. How long, Dave, do you think this great AI data center build out can go on for? You'll see different estimates. Is it 1 year? Is it 2 years? Some folks say, is it longer? What do you think? Because of course that has been this just incredible tailwind for this company.
Yeah, well, I think if we talk about kind of the broader AI story or generative AI story, I think we remain in the very, very early innings of this. And there is continued momentum for the build out on the data center side. The question mark comes down to is how much more growth can we see, especially as now we're moving into the inference side. And on the inference side, though, we're going to need more and more chips. And NVIDIA is by far the leader in providing the chips that are needed. So I don't think that this report shows any signs of AI cooling down. It may kind of show that the estimates in the high end probably maybe need to be lowered a bit. And I think the stock is reacting sort of in a modest fashion because of that. So again, even though this wasn't a gangbusters quarter where everyone's shocked and awed by the numbers that NVIDIA has put up, essentially everything ex the China side continues to show the positive trajectory.
Dan Howley, my friend, I know you've been listening to this call. I want to get your take. What are some of the key headlines to you?
Yeah, I think obviously the beat on the top and bottom line coming in loud and clear. A lot of discussion on the Blackwell Ultra. We're expecting to see that. They talked about how they expect to get that ramped. And then going into where they see the future kind of the company going, and that's in these kind of, robots, essentially. They talk up how they just launched the next generation of their Jetson computer. That was something that was announced earlier this week. I think that's something to absolutely keep an eye on, though it's not going to be driving a lot of revenue in the meantime. That's something that they're looking to build out into the future alongside these AI factories. This idea of physical AI that Jensen has been coming back to. Kind of kicked that off at GTC in March, and it's kind of been continuing to go along with that discussion of those physical AIs. And they also discussed the H20 when it comes to that chip. We have Colette Kress discussing that here.
In July, the U.S. government began reviewing licenses for sales of H20 to China customers. While a select number of our China-based customers have received licenses over the past few weeks, we have not shipped any H20 based on those licenses. USG officials have expressed an expectation that the USG will receive 15% of the revenue generated from licensed H20 sales, but to date, the USG has not published a regulation codifying such requirement.
Yeah, so obviously we don't have, or they don't have any kind of legislation or rules written about that 15% that we've all been discussing when it comes to China sales. So we'll just have to see what happens. One of the points that she made was they could see between $2 and $5 billion worth of sales if they do get that kind of 15% worked out and the licenses worked out in time for the next quarter. But again, going forward, the forecast Q3, no H20 sales included in that forecast for now.
Dan, as you're listening here, are you satisfied with the clarity and line of sight you're getting into China, the China business, both now and what they see ahead?
Yeah, I think they're kind of being overly clear about it. You know, going into that U.S. government 15%, going into the licensing, explaining that they didn't include that in the Q3 outlook. I think that's something that, you know, a lot of analysts are going to want to know a lot more about when they get their chance to ask questions. But it's clear that they're aware that this is something that investors are going to be looking at, and so we hope to get a little more clarity if we do get some of those analyst questions on the call.
Dave, if you had a chance to ask a question or two for Jensen Huang or Colette Kress, what would be top of your mind?
Well, I think we've said it 1,000 times, but we'll say it again. The question's about some clarity on China. So more clarity, particularly in regards to what type of customers those licenses were given to, and when perhaps, when we have codification of this agreement, that we could see those shipments, whether it's that 2 to 5, because I agree with the point that all becomes upside. But the other question that I would dive into, in some of this could simply be that analysts are beginning to get ahead of themselves when it comes to the data center side. So of course we know that's the growth area. The other segments of NVIDIA's business actually did quite well on a sequential basis if we take a step back and look at them, but on a size basis, they're just so much smaller than the data center side. It's not necessarily growing as fast as I think, particularly the most bullish analysts expect. And once we get kind of past this China noise, do investors then sort of take a step further there and say, well, what's really going on in the data center side? To the earlier question, are we going to see this 600 billion? And is that how much of that is really going to go to NVIDIA? I think, particularly because of their product pipeline and robustness there, we likely will. But it's not great to see kind of 2 back-to-back quarters without sort of outsized results from the data centers.
And Daniel Newman, your thoughts here?
If I was talking to Jensen, I would basically want him to double down on exactly what your other guest just said about China. And then the other thing that I'd really want to focus in on is where is the upside here? See, we don't see any slowdown in these numbers. We don't see any indication that AI is pulling back. We see a really tidy quarter, but we see an over-focus on this one number from the data center. The other thing to remember, Josh, is that the entire portfolio is AI. We're all hyper-focused on the 5 big companies and these neoclouds and what they're spending on Grace Blackwell. But what about automotive? That is the future of autonomy. What about the gaming chips? What about the PC and that part of their business? All of those businesses are performing well. This is a company that's firing on all cylinders. I think it's getting the output of a really hyped up number, and now you're seeing them just doing well, and you're saying, gosh, this is what happened. Remember Zoom during COVID? You know, they grew hundreds and hundreds of percent. All of a sudden they pull back and they're only growing 50 and everyone says it's over. The only difference is it's nothing like Zoom in the sense of AI's longevity. And as we flip to inference, trillions of tokens will be needed every single day.
All right, thank you, Dan and Dave. Appreciate it. Coming up, make sure to tune in for our live interview with NVIDIA CEO Jensen Huang at 6:30 p.m. Eastern. I'm going to bring you that interview along with expert analysis. You won't want to miss it.